Have you ever looked at a number so large that your brain simply refused to process it? $1 million sounds like a lot. $1 billion sounds almost impossible. But what about $2 trillion? That's a number so absurdly massive that if you spent $1 million every single day, it would take more than 5,000 years to spend it all. Now imagine a company preparing for an IPO at that valuation. Not Apple, not Microsoft, not Amazon, a company that started by launching rockets into the sky. And somehow investors are being told that this company could be worth nearly $2 trillion. The company is SpaceX. And depending on who you ask, this could either become one of the greatest investments in modern history or one of the most spectacular financial mistakes ever made. What's shocking isn't just the valuation. What's shocking is the reason behind it. Because the biggest driver of this astronomical price tag isn't rocket launches. It isn't Starlink. It isn't even the business that's currently making money. It's a future business that at this very moment generates exactly $0 in revenue. Zero. Yet investors are being asked to assign hundreds of billions, possibly trillions of dollars in value to it. And that's where the story starts getting strange. Very strange, because when you dig beneath the headlines, beneath the excitement, beneath the social media hype and the Elon Musk mystique, you discover a battle between two completely different visions of reality. One side sees the birth of an empire that could reshape civilization itself. The other sees a speculative bubble fueled by dreams, promises, and a dangerous concentration of power. And the deeper you go, the more unsettling the questions become. How can a company be valued at more than 100 times its revenue? Why are investors willing to pay prices that seem disconnected from traditional financial logic? What exactly are orbital AI data centers? And perhaps the most important question of all, if you buy shares in this company, who is really in control? You or Elon Musk? To understand what's happening, we first need to understand why SpaceX became one of the most admired companies on Earth. Because make no mistake, SpaceX has accomplished things that many experts once considered impossible. Not long ago, launching anything into space was extraordinarily expensive. Governments spent fortunes, missions failed, rockets exploded. Every launch felt like lighting a mountain of cash on fire. Then SpaceX came along and completely changed the economics of space travel. Instead of throwing rockets away after a single flight, they learned how to land them, reuse them, fly them again. What sounded like science fiction slowly became routine. Suddenly, the cost of sending cargo into orbit started collapsing. The price dropped from tens of thousands of dollars per kilogram to only a fraction of that. Industries that once couldn't afford access to space suddenly found themselves with opportunities. Governments noticed. Militaries noticed, businesses noticed, investors noticed. SpaceX wasn't merely competing, it was rewriting the rules. Then came Starlink, thousands of satellites circling Earth, creating a global internet network capable of reaching places traditional infrastructure could never reach. Remote villages, ships in the ocean, aircraft crossing continents, disaster zones, rural communities. Starlink transformed from an ambitious idea into a rapidly growing business generating billions of dollars in revenue. For many observers, this was proof that SpaceX wasn't just another visionary company with big promises. It was a company that actually delivered again and again. But then something happened that changed the conversation entirely. Artificial intelligence exploded. Suddenly, every company in the world wanted more computing power. AI models became larger. Data centers became bigger. Electricity consumption skyrocketed. Tech giants began spending staggering amounts of money to secure computing infrastructure. Billions became tens of billions became hundreds of billions. The race was on. Whoever controlled the future of AI infrastructure could potentially control one of the most valuable industries ever created. And that's when a bold new narrative emerged. A narrative so ambitious that it made reusable rockets seem almost ordinary. The idea put data centers in space. At first glance, it sounds insane. Why would anyone place massive AI computing infrastructure in orbit? Why not simply build more facilities on Earth? Supporters argue that orbital data centers could eventually unlock advantages that terrestrial facilities cannot. Unlimited solar energy, reduced environmental constraints, new forms of global connectivity, potentially revolutionary capabilities. It sounds exciting, it sounds futuristic, it sounds exactly like the kind of idea that captures headlines and investor imagination. There's just one problem. Right now, it doesn't exist. Not as a revenue generating business, not as a proven technology platform, not as a commercially validated operation. Investors aren't paying for demonstrated success. They're paying for the possibility of future success. And that distinction matters more than most people realize, because history is filled with examples of investors falling in love with visions of the future. Sometimes those visions become reality, sometimes they don't. During every major technological revolution, fortunes have been made by people who saw the future early. But fortunes have also been lost by people who mistook possibility for certainty. That's the uncomfortable question surrounding this IPO. Are investors witnessing the next great technological revolution? Or are they assigning trillion-dollar valuations to ideas that may take decades to become economically viable, if they ever do? And the numbers become even more startling when you look at the company's financial details. According to reports discussed by analysts, SpaceX's traditional businesses remain incredibly strong. Launch services continue to dominate. Starlink continues to grow. These are real businesses with real customers generating real revenue. But then comes the AI component, the division associated with the company's broader AI ambitions reportedly lost billions of dollars in a single year. Billions. Think about that for a moment. Imagine owning a highly profitable business. Now imagine attaching another operation that burns through money at a staggering rate. Suddenly, the profits disappear. The company's financial picture becomes far more complicated. And yet, investors remain enthusiastic. Why? Because in today's market, narrative can be just as powerful as numbers, maybe even more powerful. Investors aren't merely buying current earnings, they're buying a story about the future, a story about AI, a story about humanity becoming a spacefaring civilization, a story about one man who has repeatedly achieved what critics said was impossible. And that's where things get even more fascinating, because the real controversy isn't just about the valuation. It's about power, extraordinary power, power concentrated in the hands of a single individual. Because buried within the IPO structure is something that could fundamentally change the relationship between shareholders and the company itself. Now imagine you've invested your savings into what could become the biggest IPO of the decade. The stock begins trading. News headlines celebrate it. Social media calls it the future. Your portfolio starts growing, and you feel like you've made one of the smartest financial decisions of your life. Then one day, the CEO wakes up and decides to move billions of dollars from one part of the company into an entirely different venture. Maybe it's another AI project. Maybe it's a new moon colony initiative. Maybe it's something nobody has even imagined yet. Naturally, you'd assume shareholders would vote on a decision that massive, right? That's how public companies usually work. Investors own shares, shareholders elect directors, and major decisions involve some level of accountability. Except, what if your vote barely mattered? What if owning the company didn't actually give you meaningful control over the company? That's exactly where one of the biggest controversies surrounding this IPO begins. Hidden behind all the excitement about rockets, satellites, and artificial intelligence is a governance structure unlike what most everyday investors are used to. The proposed dual class share system gives Elon Musk approximately 85.1% of the total voting power. Read that number again. 85%, not 51%, not 60%, 85%. That means no matter how many ordinary investors buy shares, no matter how many institutions invest billions of dollars, no matter how loudly shareholders disagree with the decision, Elon Musk effectively remains in control. He doesn't simply have influence. He has overwhelming authority. For supporters, that's actually a good thing. They argue that every revolutionary company needs a visionary leader who isn't constantly distracted by quarterly earnings reports or pressured by impatient Wall Street investors. They point to history. Steve Jobs was once fired from Apple after losing influence over the board. Years later, Apple brought him back, and he transformed the company into one of the most valuable businesses in history. Mark Zuckerberg maintains majority voting control over Meta. Larry Page and Sergey Brin structured Google in a similar way. The argument is simple. Visionary founders create extraordinary companies because they aren't forced to satisfy short-term investors every 3 months. They're free to think 10 years ahead instead of 10 weeks ahead. And when you look at Elon Musk's track record, it's easy to understand why people believe that argument. This is the same person who took electric cars from being a niche curiosity to a global industry. The same entrepreneur who proved reusable rockets weren't science fiction. The same businessman who built the world's largest satellite internet network while many experts said it couldn't be done. Time after time, critics doubted him. Time after time, he delivered. So supporters ask a simple question. If Elon Musk has already accomplished the impossible multiple times, why doubt him now? Maybe orbital AI data centers sound crazy today for the same reason reusable rockets sounded crazy 15 years ago. Maybe everyone laughing today will be the ones regretting it tomorrow. It's a compelling argument, a very compelling one. But critics believe that comparison ignores one important difference. Every successful innovation still has to obey the laws of economics. Building rockets is difficult. Building thousands of internet satellites is difficult. But at least both businesses had a relatively clear path to generating revenue. Customers wanted launches. Customers wanted internet. The demand already existed. Orbital AI data centers are completely different. Before they can become profitable, an enormous chain of technological miracles has to happen. First, the hardware itself has to survive the harsh conditions of space. Then it has to be launched at an affordable cost. Then it needs enough power to operate continuously. Then the cooling systems have to function reliably in orbit. Then maintenance becomes an entirely new challenge because you can't simply send a technician to replace a faulty server sitting hundreds of kilometers above Earth. Every single component becomes exponentially more complicated. And that's before asking the biggest question of all. Will customers actually want to run AI workloads in space? Today, companies like Microsoft, Amazon, and Google spend billions building enormous data centers on Earth because they're easier to maintain, easier to upgrade, easier to expand, and dramatically cheaper to service. Convincing businesses to move their most valuable computing infrastructure into orbit isn't just a technical challenge, it's an economic challenge. Investors aren't merely betting that SpaceX can build orbital data centers. They're betting that the entire world will eventually decide those data centers make financial sense. That's an incredibly bold assumption. Yet somehow, that assumption is contributing to a valuation approaching $2 trillion. To understand how unusual that is, let's look at one number that has many analysts raising their eyebrows. According to discussions surrounding the IPO, the valuation represents roughly 107 times annual revenue. Think about what that means. Imagine a local coffee shop earning $100,000 a year. Using that same multiple, someone would value that tiny coffee shop at more than $10 million. Most people would immediately recognize that as absurd. Yet in financial markets, when excitement reaches extreme levels, valuations often become disconnected from present-day reality. We've seen this movie before. During the dot-com boom, companies with almost no profits reached unbelievable valuations because everyone believed the internet would change the world. And they were right. The internet did change the world. But here's the twist most people forget. Thousands of internet companies still failed. Being correct about the future doesn't automatically mean every investment succeeds. The same thing happened during cryptocurrency booms. The same thing happened during housing bubbles. The same thing happened throughout financial history. Every revolutionary technology creates extraordinary winners. It also creates extraordinary speculation. Separating the two is where fortunes are made or destroyed. That's why this IPO has become one of the most fascinating investment debates in years. Nobody questions whether SpaceX has already achieved incredible things. The debate isn't about the past, it's about the future. Specifically, how much should investors pay today for a future that hasn't happened yet? This is where one of the strongest voices supporting the company enters the conversation. Justice Palmer of Fortuna Investments doesn't see a rocket company. He sees infrastructure. His comparison is surprisingly simple. In the 19th century, railroads transformed economies because they moved people and goods across continents faster than anyone thought possible. Entire industries were built around railroad infrastructure. Cities expanded because railroads existed. Fortunes were created because transportation costs collapsed. Palmer argues that SpaceX is doing exactly the same thing, but for space. Instead of building railroads across America, it's building transportation infrastructure between Earth and orbit. Every time launch costs fall, entirely new industries become economically possible. Manufacturing in space, tourism, scientific research, satellite services, resource extraction, communications, even businesses that haven't been invented yet. If that vision becomes reality, then today's valuation could eventually look cheap. That's the heart of the bull case. They aren't valuing SpaceX based on today's earnings. They're valuing the company based on the possibility that it becomes the foundation upon which an entirely new space economy is built. And when you hear it explained that way, it almost sounds reasonable. Almost. But investing isn't about believing a story. It's about assigning probabilities. Even if orbital AI data centers become technically possible, what are the chances they become commercially successful? 50%? 20%? 10%? Nobody knows. The market is trying to price an uncertain future with incredible precision. And history has shown that's one of the hardest things investors ever attempt. Perhaps the strangest part of this entire story is how much it depends on one individual. Whether you admire Elon Musk or criticize him, One fact is impossible to ignore. His reputation itself has become an asset. Investors don't just buy SpaceX because of rockets. Many buy because they believe Elon Musk can repeatedly achieve what others consider impossible. That's an extraordinary level of trust to place in a single human being. It creates enormous opportunity, but it also creates enormous risk. Because if the vision succeeds, early investors could be rewarded in spectacular fashion. But if the vision fails, shareholders have remarkably little ability to change the company's direction. They can't easily replace leadership. They can't meaningfully outvote management. They can't force strategic changes if the controlling shareholder disagrees. In other words, buying this IPO isn't simply investing in launch services or Starlink. It's placing a long-term bet on Elon Musk's judgment, his execution, and his vision of the future. That is simultaneously the company's greatest strength and its greatest risk. And that's why this IPO has captured the attention of investors across the world. It's not merely a debate about numbers on a balance sheet. It's a debate about how much faith should be placed in one entrepreneur, one vision, and one future that hasn't arrived yet. Maybe decades from now, historians will look back and say, this was the moment humanity truly began building the economy of space. Or maybe they'll point to it as another reminder that even the most extraordinary companies can become dangerously expensive when optimism outruns reality. Right now, nobody knows which story will be written, and perhaps that's the most fascinating and unsettling part of all.